trudging higher like this, we end up having these little dips. And so the level I like to really look at and say, well, that I've been looking at for several days is, can we come back to that 15,100 level? Can we look at old resistance as new support? You know, my thought is always when I trade, try to make conceptually simple statements that say, listen, can I hold my breakout zone? Is it 15,000? Is it 15,100? And when I come in there, notice, you see where your crosshairs are? Mm-hmm. You notice those patches to the left that have the 1, 2, 3. Actually, the tops, yeah, right there. Yeah. Notice how long it takes to really resolve out of there. And a lot of times we come in and we go, oh, here's my breakdown, when really all it's doing is flushing out support. And so this is the nature of the current continual bid up market that we have. And it's because nobody, well, my supposition is because nobody's getting yield from the bonds. And what is the bond market? Maybe 10 times the size of the equity market. And so if they say, hey, listen, I'm tired of watching everything move up and my bonds having, you know, this low return, I'm going to put a little bit into the equity market, and a little bit from the bond market into the equity market gives it a terminal bid up. And so those are the guys that are the cool hand Lukes, and they're going to come in on the deep dip and they're going to go, all right, let's get involved right here. But the note to ourselves could be, listen, even though we're pressing up against resistance, bouncing up against resistance, bouncing up against resistance, and we're thinking to ourselves, oh no, this is going to break down, the undercurrent of the broad market, which is the terminal bid, just wait it out and look for those support edges to hold, because the nature of the market, why IBD has worked so well for so long, is that the nature of the market is that it is a bullish instrument. We buy to invest, so things might go up higher. And this really is what is happening without any correction, because we've got this underlying protection event where people are really rotating because the whole landscape has changed, because there's no opportunity to really make anything else anywhere else. And so, you know, that Tina, there is no alternative, is giving us this terminal bid. So that's my thought about that. Doesn't mean that we need to be complacent, because some of the bids can be very savage, because some of the sell-offs can be very savage into the deep zones. So we just have to exercise patience and say, all right, prove to me that you are holding this particular level. And sometimes that can take days and days, but we all want to catch that bottom because it makes us feel like heroes. A lot of times we end up being the goat though. And so, and not the good goat, the bad one that's roped. And so we just need to give it a little patience and let it come back, test the level. And so we're easy does it up into the range.
Okay, well, we'll see what today brings, and this last pullback to the 50-day and reversal definitely seemed like an interesting turning point for us as growth investors. So we'll have to see what buying opportunities are out there today. So speaking of, I'm now going to go ahead and flip on over to our MarketSmith charts here. And Ed, let's take a look at DocuSign. Earnings are out. And after the close last night, the stock was down 2-3%. Now today, up about 2% in the early going. So yet another example of how the overnight action doesn't necessarily always translate to the next session. But what do you think investors should be doing with their positions right now?
Well, I mean, if you have the position, if you stuck through it through earnings, I mean, there's no reason to get out of it. I mean, I think the question is, do you add or do you anything like that? I don't know. It's sort of a messy little area. I mean, you know, you could buy it because it's bouncing off the 50-day line. It's above the old buy point. There's the high from earlier this week where it's sort of tried to get there. There's a flat base, which is just above that, because really the flat base is at 310.51. So there's all sorts of things you could do in that regard. I don't know. It's just sort of, it looks good, but I'm not sure. It isn't quite as obvious. Aha, here's where you buy it. I mean, you could buy it, but it isn't quite as, I'm not really seeing a great obvious spot right now.
Well, Chris, we added DocuSign to Leaderboard and it went to Amazon, but I'm going to go back to, I clicked the wrong button on my keyboard, trying to draw a line there. We added it to Leaderboard on this last reaction to earnings, up 20%, massive volume that sparked this run that we've seen for the stock, this reversal at the 21-day line. Maybe that was a spot to add. Mm-hmm. For investors who maybe didn't have this lower cost basis here, like we did have for Leaderboard, maybe they had a little bit less of a cushion heading into the report. So maybe they did have a big cushion and they opted to, scale back their position. Would you be adding back those shares today? Or what do you think? Is it not as clear cut like Ed is saying?
Yeah, I think this is a good place to add back some shares. You could even open a position, because essentially what this is, it's support off the 50-day, and now you've got that news event out of the way. It's been acting pretty well, so I think this is fine to pull the trigger on.
Okay, and other earnings movers. Let's take a look at MDB. Also in the software sector, having a very strong day, up about 22%. Anne-Marie, how do you handle stocks that move big on earnings, or just earnings season in general? What's your approach?
I used to trade earnings very actively in the option space. And sometimes when you're trading and you think, yeah, I got it, I know about what's going to happen, you get sort of hit in the face with a hammer. And so through the earnings space, what I have a tendency to do is look for the rising of implied volatility into the earnings approach.